Hey, welcome everybody. I'm Stephen Kalajian and welcome to Back to the Futures. I'm so excited to be here. Proud of Tradier Futures. So many people are really moving towards the futures markets, the leverage, the volatility, and it's just an enormous burst of I'm seeing from people all around the world coming to me and asking me about futures. And I'm so proud to be here twice a week, every Tuesday and Thursday from 1:30 to 2 o'clock. You know, if somebody said to me, "What's my favorite asset in the world to trade?" It's the S&P futures by far. I love them. I mean, to me, the patterns are the patterns. The patterns repeat themselves. And, using my software, my technology, I'm able to identify trends in patterns in the market. Remember, I have 5 conditions that my research has showed me. It's a trend, it's a buy reversal, it's a sell reversal, it's a correlation, and it's a disconnect. So I want to show you some, and of the 5 conditions, each of the conditions has 2 strategies, a buy and a sell divergence. So 5 conditions, 10 strategies. But if you're going to trade on an intraday basis, today's topic is going to be using multiple time frames. Okay, using multiple time frames. So looking at the index futures, I look at the 3-minute, the 5-minute, the 15, the 30, and the hourly. And when it comes to the underlying ETF, like the spiders, I look at the 5, 15, 30, and hourly. In order to trade the futures markets effectively, right, you need to look at the underlying ETFs, the spiders, the SPY, and I also look at the STS as well, but let's just stick with the spiders on this. Why? The continuous contract on the S&Ps trade 23 hours in a day plus, and I look at the underlying ETF, the spiders, I look at from 9:30 to 4. I don't look at pre and I don't look at post-market data. I only look at the 9:30, what's called RTH, real-time hours. So really cognizant of that. That's important based upon my research when you're trading. Today, for example, we came in, we had a disconnect on spiders. The 15-minute time frame on my algorithm was negative right here. We picked up a couple buy divergences off the underlying ETFs and on the continuous contracts on the 30 and 60-minute time frames. I was saying I would be looking to buy, but then, bam, at exactly 11:15, at 11:15, right here, I got my buy reversal on the underlying ETF, the SPY, that correlated to buy with its 30 and 60-minute time frame, right? I said we're going to look, the trade of the day is going to be the pullback on the 15, and exactly what happened. Here's a beautiful pullback on the 15 S&Ps. Now, we called this short up here. The reason why I said I'd be looking to short these is to look for this pullback, all right? And again, when you're fading the trend like that, I would switch to micros. When you have a correlation, the way you did on the underlying ETF, the spiders correlating with its 30 and 60-minute time frame, that's when you can potentially, if you like and you're comfortable, switch to the big ones, okay? So when we got this pullback right here, I gave a range, I believe it was like 27 to 32 or 27 to 33, and it got beautiful. I'm talking the S&P futures, that is, and I'm just showing you where it is on the spiders. And then ultimately, I said these 15-minute time frames are going to push up. It pushed up. It pushed down again. It happened very fast. But again, if I was able to capture that long, I would have, because it still was within the trend on the 15-minute, which, again, like I told you, correlated with the 30. S&Ps, I believe, on that one got down to the 29.5 level on the S&Ps on that. And then it never looked back. It just absolutely never looked back. And then we got this big push up now. I'm sorry. Yeah. Let's see here. Actually, the S&Ps got down to 27 and then ran 20 points on that. So the first pullback right here happened at exactly 11:35. S&Ps got down to 26 3/4. I had my range. My stop would have been about 25 on that. Okay. And then it pushed up, and you can see it even pushed up probably around the 12:15 up to 40. So it ran about 13, and then it dropped here again down to 27. Okay, and it just again just could not capture it. It would happen too fast. And then it just rallied all the way back up here. Now almost 20 points on the S&P. Being on the right side of the market, using multiple time frames. And that's what this is all about. So many people don't understand how to use the multiple time frames and trade using the underlying ETFs on the spiders when you're trading the S&P futures. If you're looking at the NASDAQ futures, the same identical thing. Trading the NASDAQ futures, you need to look at the underlying ETF, the QQQ, and on the 5 and the 15, also with the 30 and the hourly time frames. These are really important things to really notice here, that for you need to be able to follow the markets in a way, but not just looking at the continuous contract and using multiple time frames. If I did not know, okay, that the spiders, if I did not look at the spiders, the SPY, and when we got that pullback at 11:30, 11:35 on the S&Ps, there was no way in the world, just by looking at the S&Ps, that I would be looking to buy that. The fact that the spiders are right next to me, chart by chart, side by side, right? I was able then to determine what? To determine the ability to look at the market in the way that gave me the best advantage. To look at the market by using the multiple time frames and looking at the different assets, whether it's the S&P and the spiders. Now, one of my favorite patterns in the world is when the underlying ETF reverses to buy and it correlates with its 30 and 60-minute time frame. Well, then you better be looking to buy pullbacks here. I didn't think I called one short from that point on. From 11:15 on, I was looking for longs, not shorts. Okay. Now we're getting a little bit overbought here on the 15-minute time frame. Okay, right here, a little bit overbought, and the 5-minute time frame reversed to buy. So now I can say, if you want to take a scalp short on the S&Ps, I'd be looking to scalp short this 47.5 up to 52.5 range. I do like a 5-handle range. As it's getting up into that range, then I'd be looking to short and then looking for a pullback to cover and then go long on that 5-minute time frame. All right. Now, it depends on your tolerance of trading, how many trades you want to do in a day. Normally, my research has shown me, of course, the S&Ps are dropping, as I said that. It really predicates on understanding the notion of how many trades you want to do a day. Set your goals, right? So normally my research has shown me that you'll get 4 to 6 great trades a day on the underlying ETF, and then on the continuous contract, probably anywhere from 8 to 12, or anywhere from 10 to 14 phenomenal great trades because of more data, right? So if you take just the 6.5 hours in a day, okay, we're getting 4 to 6. So now you take that, times 3. So you're getting anywhere between maybe up to 18 on the S&P futures, okay? So let's just say, for example, you took a scalp short and you sold 2 micros at 47.5. Now they're trading at 45.5. You just made yourself $20. I know it's not a lot of money, but it's not the point. And then less fees. You're talking maybe about 18, maybe 17. But again, it's about constantly just chipping away, hitting your goal. If your goal is to make $100 a day, I would stop, learn, watch, listen, learn software, learn from someone who's traded over 41 years, right? And then August 1st was my 41st year. And then being able to determine and understand the patterns, understand what you're looking at. And I've taught this to some of the top hedge fund managers in the world, okay, using multiple time frame, using the various different indicators I look at, understanding how the markets work, in the sense of using indicators that when I use combination theories of indicators, right? And whether you're trading gold or whether you're trading NASDAQ futures, Dow futures, Russell futures, 30-year bond futures, agricultural futures, whatever, it doesn't make a difference, okay? It's all about using multiple time frames and being able to fully understand how to align yourself with the right patterns. And that's what I do every single day. And there's two words that come to mind that I tell people each and every day. And it's about the patterns repeat themselves. Everything is about visualization and repetition. Case closed. Visualization and repetition. That's all you need to know. Okay? Because that's what these patterns tend to do each and every day is repeat themselves. I have, look at the S&Ps dropping now, 4 handles right here. So I knew this pattern, okay? The MACDs are above the pivot, the 5 cross positive right here on my algorithm. So I knew that this was a short. S&Ps, I probably look to buy them if they go down to the 36.5 to 41.5 range for a trade, okay? The 5's just correlated, so let's just see if we get a little bit more of a pullback. I don't know if we're going to get that much lower. Let's just see here. What was the low? Got down to 42.5 on that. Okay, I'm expecting another pullback and then another push up off the 5-minute time frame to just rally too. So if you had sold, let's say you had sold the 47.5s, and now, boom, that was it. And now they dropped down to 42.5, 43.5. You just made 4 points on, okay, you made $20 on one contract. If you sold 2, you're making 40 before fees, okay? S&P is right back up, just down. This rallied 4 points just now off that pattern. I'm getting a really great buy reversal here on gold. Gold is up $1.60 here. A nice pullback on gold would be a really nice long setting up, hopefully in the next 30 to 40 minutes on gold. So many people have come to me and talked to me about futures, and I'm so happy to be part of Tradier Futures because, you know, knowing the owners and knowing the firm for the more than a decade and knowing the great people that really put their time and effort into building Tradier and then now Tradier Futures, to me, this is a great honor to be able to stand here, to be able to be in front of all of you, to be able to talk about the futures markets, understanding the margin capabilities. One of the lowest firms to be able to have margin of a $50 micro, and so you know, if you trade 5 micros, the margin is about $250 that comes out of your account. Okay, and if you trade the big ones, well, it's about 500, right? So let's just say, for example, you bought one S&P future at 42.5 just now. It went up 4 points. You just made yourself $200 less fees. So that's where the beauty of futures is. I don't really, talk about options a lot, obviously, but the thing is, in that when you're trading futures, to me, I think a lot of people say to me, "Well, I don't know futures. What's the difference?" There's no difference. There's no difference if you're trading an option, except the fact that an option overnight, if you hold a position, will decay in value if the stock goes down or stays sideways. A future will always hold its value on the overnight session, meaning the fact that I'm more inclined to say to people who are beginners, who are people who are just looking to get involved, or people who are shifting away, they'll say to me, "Steve, what do you think of options?" Now, what do you think of futures? And I'll say, well, I can't give you advice like that, but I think for me, futures is a phenomenal vehicle to trade. You don't have to have boatloads of money in your account like stocks to trade the PDT. You have to have the PDT rule, the $25,000 or more to be able to get the 4-to-1 intraday, margin. But futures is, to me, I think it's going to, it has exploded. I see the demand for it. I see the people coming to me and wanting to learn in such droves. And it just gives me the thrill because this is my favorite asset to trade. I love them. I really, I love teaching about it. I love teaching the correlations. I love talking about the multiple different time frames. I really, really, no question is ever stupid. I talk to people all weekend and all night long. At times, there are people who call me from all around the world. And it's important to understand how these patterns repeat themselves based upon the near almost decade of me building the software that you see right now. This software is built on TradingView. Anybody who needs to talk to me about it, you can text me or call me at 914-500-7484. So today we saw the markets, right? With these buy reversal on the 15-minute time frame, I knew, number one, that the lows were in for the day. The 56.11.5, I knew that the lows were in for the day. I knew that pattern right there on the spiders, that the S&P futures made the lows, and that's big, right? So imagine if you're short, okay, and you get this buy reversal. Well, guess what? I would be covering the short and then reversing, looking to go long, right? A lot of people have to understand that having this tool in front of me, the research I spent and built, establishes one of my 5 keywords, is confidence, right? Having this in front of me gives me the confidence to be to be able to look at the trade idea, being able to identify the markets, the trend, the buy reversals, the correlations, right? So when those 15-minute time frames reverse to buy on the 15 spiders, okay, it correlated with the 30 and 60-minute time frame. Well, then guess what? You're swimming with the tide. You're absolutely swimming with the tide. It's an unbelievable way to see the markets, to be able to identify the trend, to say to yourself, wow, I know this, Steve taught me this, the 15 correlate with the 30 and the 60. I'm going to wait for the first pullback on the 5 and 15-minute time frames, and boom, they ran. Okay? These patterns repeat themselves. Just got to be patient. One of my 5 key words is patience, right? And then you got to obviously have the passion to want to do this each and every day. All right. So if I could switch here, and I'll show you the 30-minute time frames, just so I can show you here the 60 and the 30. Here's the 1 hour. And here's the 30-minute. So you can see here that the 30 and the 60 and the 30-minute time frames were in buy mode. This is my indicator right here. So it pretty much told me that the bigger time frames are bullish. So this is what I'm trying to explain to you. So when I got the buy on the 15-minute time frame, it was giving me the ability to recognize why. I went from a disconnect condition, right? The 30 and 60 were bullish, the 15 was bearish, so that means a disconnect. That means 2 of the 3 were bullish, 1 was bearish. So when the 15 correlated, it correlated to now a trend. So it gave the 15 to 30 and the hourly all the, now you're swimming with the tide. Now you're swimming with the tide. And it's really important to understand this, that when you're able to visually see this, okay, then you can react, right? To be able to understand how to trade futures. I've taught this to some of the biggest hedge fund managers. I keep saying this, okay? It's important. Today, crude oil, all right? I had sells on the USOs, on the 15, the 30, and the hourly time frames. So every bounce I got, okay, on the 5-minute time frames. Now I'm going to wait for a nice short on the 30-minute. Oil's down over 2.3%, down $1.84. It all started this morning, right? The USOs reversed to sell on the 15. I got the bounce on the 5-minute. The 30-minute reverse to sell. Now the next play is I'm going to look for a bounce, and a bounce like this on the 15-minute time frame. I'll show it to you here. If I can type in the symbol, hopefully this is it. Okay, it's the 30. Okay, let me just switch this over to the, here's the 30. Let me just switch this over to the 15. Here's the 15-minute time frame reversing to sell. I'll put the 15 here for a second. And then again, if you're trading oil, and here's the 5-minute, nothing but shorts in oil all day. Nothing but shorts. Okay. And here's oil. If I could just just move this over. Okay, so here's oil. Here's a 15-minute reversing to sell on the USOs right here. And then you have, this is look at this overbought condition right here on the 5, right here on oil. That was around 11 o'clock in the morning. And then look at this negative trend all way down. Not once did I would say I would look for a long in oil. Not once. Oil is in a monster negative trend. You can see the 15-minute time frame right here. The MACDs are very, very negative. Now looking at the 30-minute time frame on the USOs, you can see the 30-minute reverse to sell here, and you can see the negative MACD. So oil, okay, has been in a significant downtrend, and oil since I think it's been like, let's see, since around 11:10, oil was trading around the 76.10, and it's just dropped north of 60 cents since 11:10. Okay, since 11 o'clock, maybe 76.15, 76.20. To be able to have the software give you the ability to recognize the trend, to be able to recognize the pattern, and to be able then to utilize this to help you identify trade ideas and for you to be able to pull the trigger. Look at the S&Ps go here, making new highs here, almost. They're close to making new highs here. Okay, again, this was a beautiful pattern here on the S&Ps. Let me just see what's going on here. Oop, invalid symbol. Let me just type in the spiders here. I don't know what's going on here. Let me just type in S. Oh, Billy's doing it. SPY. Let's see here. Okay, there it goes. So there's the pullback right here. Okay, and now we're pushing up to new S&Ps just ran from 42.5 up to 48.5. I was looking for 41.5, and that was off the 3-minute time frame. And now we just ran 6 points on the S&P. It's important to note, okay, that when I look at trades, I look at the smaller time frame, the 3 to 5 and the 15-minute time frames. It's important to recognize the markets when you're waiting patiently for the pullback to use these time frames effectively. So when we got that push up just now, we got the MACDs were very bullish on the 5-minute, and then we got the pullback on the 3-minute, and that's why you're seeing the push up here on the S&P futures. Let me see if I just can correct this here for 1 second. Okay, there it is. So, and I'll switch this to the 5-minute really quick. You can see what I was looking at. This is the pullback right here. Here's a 5-minute time frame. Let me just bring this to the 15 here. Okay. I don't know what happened here. Euro dollar. Let me just see what. Bring the spiders back up. So here it is. The 15s reverse to buy. The 5-minute time frame is bullish. This is the pullback right here that I was talking about. And if I switch this to the 3-minute time frame, you'll see why I was looking to buy, even though I missed it by 1 point. This is the pullback on the 3-minute. Beautiful pattern. The MACDs are positive here. Beautiful pattern. And they just ran 6 points on the S&P. I would have been probably happy with about 3 to 4 or 5. Okay. So when you're looking at the markets, okay, and having the software, the ability to have the markets right before your fingertips, using software like this, I'm able to be on the right side of the market, and these patterns repeat themselves. So I'm able to identify these trades. So the first trade, I said I'd be looking to short 47.5s up to 52.5s. They touched it a little bit. They dropped about 5 handles on the S&P. Then I would have reversed, looked to cover, and then go long. I was looking for 41.5. They got down to 42.5. Okay. We have a couple minutes before we end of the show. Again, please, I'm doing this 41 years. If anybody has any questions or really wants to learn futures from me and really start, doing well with Tradier futures, please text me or call me at 914-500-7484. Does anybody have any questions at all? It's important to be proactive. It's important to really learn the markets and ask questions. By being proactive, it's imperative to fully understand the ability to know the markets, learn the multiple time frames, learn the different indicators, and learn how to, scale in and scale out of positions. Scaling in and scaling out of positions is something I'm going to talk about on Thursday. It's important to know your account size, how to scale in, how much risk you want to put. But remember, you need to always maintain to put stop orders in. Remember, you cannot drive a car from point A to point B without braking. If your car has a brake, then you have a brake, which is your stops. Preservation of capital is key. It's the most important thing in the art of discipline and trading. Any questions here? If not, I got about 4 more minutes. Gonna be very, very slow here. In the next, probably until after Labor Day, we'll start seeing volatility pick up, and that's going to be really key for anybody who wants to trade the markets. Volatility is key. We've seen an excessive. We were at 57.21. We dropped down to 51.20. We dropped 600 points, and from 51.20, we rallied 500. 600 down, 500 up. All right, that's a big move to have in a span of about 4 weeks. That's a monster move in the S&P futures. NASDAQ futures rallied north of 2,600 points off the low, and that was 17,371. And now we touched 20,020 a couple of days ago. So we know that's a monster move, 2,700 points. Okay, in the same 5-week period there. Again, for me, this is a great opportunity. I'm honored. I really want to be able to help as many people as possible. Being able to learn the futures markets is great. I was on the phone with so many people that are new, and I'm trying to educate them on the futures markets and understanding the markets and how to scale in and scale out a position, even how to paper trade, how to use the ladder, the matrix system, which is phenomenal here at Tradier, to be able to understand about margin, the differences between the micros and the big S&P futures, the big ones as I call it. But again, it's really about just putting your mind to it, having someone with my years of experience guide you, help you to be able to move it along so you can be really confident in trading futures. And like I said, it's the best asset that I know and that I love, and I'm so happy. Not to say that the NASDAQ futures are not phenomenal. Like on that last pullback, the NASDAQ futures just ran 30 points on that. Okay, S&Ps ran 6. Okay, on that. So it's really about what you're comfortable at, and you go from paper trading, learning how to scale in, learning how to raise your stops, put your stop orders in, and then being able to effectively hit your goal every single day. And then as you get more confident, increase your goals along the way. All right. I'll be back here on Thursday at 1:30. Again, multiple time frames is the theme of this show. It's important that every trader who's trading futures, I don't care if you're using the European session, the Tokyo session, or the US session, you need to look at multiple time frames. Have a great day, everybody. I'll see you here on Thursday at 1:30. Be consistent. Have a great day, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.